So people are like, has the banana zone been cancelled? Is Raoul a moron? Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. The banana zone starts, this is the banana zone in the box. We then have a corrective period. Look at this, corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase 2, banana zone phase 2, banana zone phase 2. Then we have another corrective zone.
That's the question weighing on many investors' minds as Bitcoin struggles to sustain its momentum. Just weeks ago, optimism was soaring. Raoul Pal's thesis of an explosive phase seemed validated as Bitcoin broke through key resistance levels. But recent price action has cast doubt on that outlook. Instead of the parabolic rally many anticipated, Bitcoin has faced sharp corrections and choppy movement. For skeptics, this volatility is proof that Pal's market expectations were overly optimistic. They argue that if we were truly in the banana zone, Pal's term for the rapid acceleration phase of the market cycle, crypto prices should be consistently surging. Instead, many altcoins have suffered steep pullbacks, and Bitcoin's price action remains erratic. Critics claim Pal underestimated macroeconomic challenges, liquidity constraints, and shifting investor sentiment. However, in his latest market update, Pal pushes back, reaffirming that the banana zone is still intact, just misunderstood. He explains that the banana zone isn't a straight vertical climb. Rather, it unfolds in multiple phases, with strong uptrends followed by necessary corrections. Investors, he argues, are making the classic mistake of expecting prices to rise in a straight line. Similar corrective phases have occurred in past bull cycles, often shaking out weak hands before the next leg up. In his latest analysis, Pal offers key insights into Bitcoin's price movements, the banana zone, and global liquidity, maintaining that his framework remains valid.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Because this is what happened in 2017. It played out again. There we had 1, 2, 3, 4, 5, 30% corrections. In fact, many of them were almost 40%. I don't remember this. Well, I do remember the one in June, July, because I sold out at about 2000. But generally speaking, you don't remember this stuff because in the end, the gains compound. So it's really important to zoom out and realize volatility is part of the story. It's how you get them. You can't have them without the volatility. Volatility is what keeps leverage in check, keeps the market healthy. So it's very healthy market right now. When we go back to 2017, January, like now, came out of the gate, collapsed. Why? Because financial conditions had tightened. And then it went up, recorrected, and didn't get going until mid-March. Where are we now? Mid-March. Guess what's likely to happen? Number go up. What happened that time? It went up big time. It went up 23x. It will not do that again this time. But the point being, it's all to play for. And we will get massive volatility in the middle, and you won't believe it, and you think it's going to be topping, and every FinTwit moron will be telling you it's topping. It won't be. We've got plenty to play for. Bitcoin, 14-day RSI, double bottom oversold. Okay, every time that happens, goes up. Sometimes it has this sideways consolidation period, then goes up. Will we have more sideways consolidation? This chart's maybe outdated by a week, for sure. Will it go up? For sure. Are we anywhere near a top? Here's our GMI cycle finder top that we use for exponential age asset management. We use this as one of the key inputs into what we're doing and how we allocate to funds. We're nowhere near. NASDAQ, let's talk about equities. You guys are nervous Nellies. This is like one of the most bearish ever readings in the history of the NASDAQ. Oh my God, Trump and Scott Bessent and tariffs, and they're all going to make us die. And you guys, stop. You are all way too bearish. The percentage of stocks trading with a RSI of less than 30 is almost record territory. And guess what? Global M2, because the everything code drives everything, drives NASDAQ too. And you guys trying to sell the NASDAQ here are selling something that is perfectly priced for liquidity. And we've had these liquidity air pockets in the past. Liquidity air pocket is when liquidity is not rising, NASDAQ overshoots, It recorrects, comes back down to trend, and then follows liquidity. Remember, NASDAQ has a 97.5% correlation to global total liquidity, which is the index that we use on a broader basis. 97.5%. Bitcoin has an 89% correlation with global liquidity. Global liquidity, I wrote about this in GMI, and there's probably not much time to talk about it now, but is my preferred measure these days. If we go back to the early phase of the Everything Code, the balance sheet was the main thing. After the balance sheet use, we started using Fed net liquidity. Once people understood that the balance sheet was printing of money and debasement, they started moving to Fed net liquidity. Now, all of FinTwit understands Fed net liquidity, as does Crypto Twitter. And so they're looking at the TGA and the reverse repo and all of this stuff. Meanwhile, the game has moved. The game is always moving. The game has moved to total liquidity in the US and everywhere around the world. Total liquidity includes M2. It includes net liquidity at every single major economy level, net liquidity, plus M2. And M2's largest driver is the dollar. That is what they're now doing, which means that they're pushing the monetary policy onto the balance sheet of the banks themselves.
Global liquidity remains one of the most crucial factors shaping this market cycle. Raoul Pal has long argued that Bitcoin's trajectory is closely tied to the global money supply, and historical data supports this. Bitcoin and the Nasdaq have consistently moved in sync with total global liquidity, and despite recent pullbacks, the overall backdrop remains supportive. While central banks may not be actively printing money, liquidity expansion continues through government spending and bank balance sheets, creating an environment where capital seeks a store of value. In a world of debased currencies, Bitcoin and other hard assets are becoming increasingly attractive. However, the market is currently navigating a liquidity air pocket, a temporary slowdown where money isn't exiting the system but isn't expanding rapidly either. These phases often lead to corrections, shaking investor confidence. Yet, Pal argues that such moments are necessary to prevent excessive leverage and speculation from disrupting the broader trend. While short-term volatility is unsettling, past bull cycles have shown that similar corrections often precede the next leg higher. If history is any guide, we may be on the brink of another strong move. Bitcoin's chart is flashing signals that have historically preceded major price expansions. At the same time, macroeconomic factors, including expectations of monetary easing later this year, suggest liquidity conditions will improve rather than deteriorate. That's why Pal remains confident that the banana zone isn't over, it's simply following its natural cycle of surges and resets. Here are more clips from his latest video.
Other thing, we just had a massive move in the dollar. Bitcoin versus the dollar. Every time you have a massive move, Bitcoin goes sharply higher. Okay, so I think you're getting the point. So the common refrain I get on X is, oh, look, Raoul, he's the banana boy. So people are like, has the banana zone been cancelled? Is Raoul a moron? Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. And those of you who expect number go up all the time are only remembering what the banana zone is at certain periods of time. Your number's not going up because you own a bunch of shit alts and you're like complaining. Okay, I get it. Let's go through this again for you morons out there. The banana zone starts. This is the banana zone in the box. We then have a corrective period. Look at this. Corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase 2. Banana zone phase 2. Banana zone phase 2. Then we have another corrective zone. And you're all going to be throwing your toys out the pram. It's all over. It's just like 2021 again. Blah, 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 blah. And guess what? We will correct and it will go higher again. That's how the banana zone works. And you guys have to learn patience. I know I say this all the time.
The markets are driven by emotion, fear, greed, and impatience. Right now, impatience is fueling much of the skepticism surrounding Raoul Pal's banana zone thesis. However, as Pal emphasizes, this isn't a straight-line rally. It's a structured, multi-phase journey. Investors who misunderstand this are most likely to be shaken out. Bitcoin's historical cycles have always followed a pattern of explosive growth, sharp corrections, and renewed surges. What we're seeing now is not the collapse of the banana zone, but the natural ebb and flow of a high volatility asset within a broader uptrend. The biggest mistake investors make is exiting too soon, just before the next move higher. Powell's core message is simple: patience is key. Those who expect a smooth ride without setbacks are missing the bigger picture. Bitcoin and other risk assets are part of a much larger macroeconomic shift driven by global liquidity expansion, institutional adoption, and a long-term move toward decentralized asset. According to Powell, the banana zone isn't over. It's simply going through its natural cycle of surges and resets. The only question is whether investors have the conviction to hold through the corrections and capitalize on what's coming next. In related news, Bitwise CIO Matt Hogan believes that Bitcoin's recent pullbacks may be setting the cryptocurrency up for a 190% upside rally. In his latest memo, Hogan describes Bitcoin's dip and rip pattern, where pullbacks in times of volatility often precede significant gains. His research shows that Bitcoin has consistently risen by an average of 190% in the year following sharp pullbacks, outperforming every other asset. Hogan also applies Wall Street's net present value framework to Bitcoin, suggesting that while short-term pullbacks are caused by increased risk perception, Bitcoin's long-term outlook remains positive, potentially reaching $1 million by 2029.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.